Hey everyone, welcome back to our channel. I wanted to do something cool today. I was going to show you guys a couple of trade recaps of trades I took on Thursday and Friday. For those of you that follow me on Instagram, you've seen the screenshots of these. We've also put these trades into our Elite Telegram. We're just gonna break them down a little bit and show you guys a little bit, basically what I was looking at and whatnot. And if you haven't hit that subscribe button, definitely do. As you all know, last week we announced that we decided to teach this, as we've had quite a few people reach out to us and asking us when we were planning to start. Original plan was December or next year, but because of the amount of people reaching out, we decided to do it sooner. So I'm going to show you a little bit about it and what it's about. So to keep things really simple and really short and to the point, it's very session based. So when I get to the charts, I look at my higher time frame, I get a bias from that, and then I pretty much look at what every session did, what Asia did, what London did, and ultimately what I think is going to happen on the higher time frame. To be completely honest, so this is Thursday this week. When I came to the charts, it was around this time. I was actually initially looking for buys on gold. Sells were not the plan. And the way the market manipulated and built it up, I had to adapt and basically realize it was going to be a sell day, even though I wanted buys. So Asia highs and lows have been wiped. So for me, it was a matter of looking at what is the market going to do next. We have a little bit of imbalance left up here, and we have this imbalance left up here, or down here, I should say. So to me, the market's going to rebalance and fill those FOMC gaps. So basically, this candle to this candle, it's all FOMC. So when I got to the market and I seen it basically shoot up, and with the way Asia printed, the highs and lows have been wiped. I figured it was going to do one of two things. We were either going to fill this imbalance and react, we were going to run this high and react, or we were going to come and react somewhere down here and go up. The market chose to go up. So we basically just sit back and let the market do its thing. As we know, the beginning's always the buildup and the manipulation. It's about, a lot of the times they go in the same direction. Sometimes it's the opposite direction. So my initial short here actually came from this reaction to our imbalance. So we got our 5 doji close. Pretty common for a reversal sign from that specific area. Whoops. And what we might do is just gonna replay to here so we don't have to go back so far. So we get our reaction here. We got our 5 doji close. We got this aggressive push down. Here you can see we got a nice test. So for myself, I take 5 pips on gold, which is 50 points. And then my spread on gold is 10 points, which is a pip. So I add 10 points on either side for a spread. So it usually brings me around that 70, 75 point mark, which is about 7.5 pips, which is pretty good for gold. And the way I was looking at this was either this trade was going to go for me or I was going to get wiped here and this liquidity was going to get run and I'd have to re-enter. So for myself, I don't do this. I just take the hit and re-enter with a small stop. How you do that and how you manage is completely up to you. That's what I do. I know my bias is pretty on point, and if it is right, if I have to take a hit to get in, it's totally fine. So on our 15-minute, we get this nice bearish engulfing here. We failed to go any higher. So I executed on that, knowing very well that this could get run. We could fill this imbalance and I'd have to re-execute. I wasn't sure if we were going to go past this imbalance, so I actually closed this trade out prematurely, you could say. So that was a 10 hours still. To me, I was looking to see if this target was met, how price was going to play here. And ultimately, what I wanted to see was price going to do something like this and smash through, or is price going to build up again? Price chose to build up again. To be completely honest, I should have entered here. I maybe wasn't paying enough attention. So that would have been a valid trade there. Your initial reaction and the test of the reaction, you could have entered there. That's not the trade I took. I ended up taking one more here because after we smashed through here, the market once again proceeded to build up. It reacted to my little line with imbalance here. And basically, once I had this reaction, I want a test of the reaction. And same thing again. I entered right here. I knew very well it could take me out and run this imbalance, in which case I would just re-execute. Once again, I don't mind taking a hit for these to go. And pretty straightforward, pretty grade A setup, I would say. We're essentially looking for the banks to trap people, and it's always the same. We wait for the build-up, the manipulation, and then we look for our true move. It all comes down to timings and sessions and our higher time frame liquidity and inducement, which we will not be going into here. And yeah, so let's talk about Friday's trade. So this was the trade I took on Friday. This was the only trade I took. There was a short here. For me, one trade on Friday is good. I don't really bother getting greedy. Same thing again. We have this continuous imbalance here. I figured that was going to get filled. We get this build up to get manipulation down. So I knew that I was going to want to go up. For me, this imbalance needed to get filled. And this is not your regular imbalance. It's continuous imbalance. Basically, that many bullish candles in a row. It's one of my confluences I use. We got our nice reaction here. And again, same thing. It's a test of the reaction. The test sustains. So I knew I was safe to take it to at least to fill this imbalance. Obviously, went a bit higher. This ended up being like an 11R. I'm pretty good with that on a Friday. Also, I wasn't sure what kind of post-FOMC action or Friday we were going to get. This one was a bit sketchy again. I entered on this little doji. And for me, I figured all of these equals were going to get run. This imbalance might get tapped into. It never did that. So again, kept me in. If it did take me out and this imbalance got filled and I basically got another wick and a reaction, I would just re-execute this again. Same thing up here. We got a reaction, test of a reaction, and if you didn't catch this buy, you could have totally caught this sell. Pretty straightforward. This is kind of what our mentorship is going to be all about, and we're basically going to teach you guys how to find these setups from the daily, the 4-hour, the hourly, and basically how we arrive at this. It's a lot of session timing based stuff and a lot of major, medium, and minor inducement stuff, and basically there's a whole system to it and how you put it together. As far as that stuff, it will be limited to how much we release on YouTube, but I will likely post some trade recaps as people do have some questions, and I don't mind going into them a little bit. As far as getting into too much detail, that probably won't happen on here. But yeah, again, guys, this is kind of the direction the elite's heading, what we're planning on teaching, and what you can see here is there's no market structure. There's no direction that market structure is given us. This is purely liquidity-based, timing-based, and session-based. So I can feel comfortable to buy here and sell here without needing anything aside from a understanding of liquidity and timing and all that good stuff. And definitely quite a bit different from regular supply and demand. But once you understand it, like anything, with a little bit of practice, it gets pretty easy. So yeah, I hope you guys enjoyed this video. Once again, if you haven't subscribed, definitely do, guys, and have a great rest of your day.